Some very positive news coming from Wall Street recently surrounding Uber. Seth Holm joins me now. What is that news, Seth?
Yeah, so last week, all the sell-side investment bank analysts initiated on Uber. We had 25 initiations, and an initiation is basically a long, detailed report where they give a huge overview on the business and what their thoughts are on the stock. And so last week, 25 analysts initiated on Uber. They're very positive overall. We had 20 buys, 5 holds, and 0 sells with an average price target of $60. The big bull in the street is BTIG. They had an $80 price target. It's a $45 stock. And they're really bullish in the fact that they think autonomy can start to bear fruit within the next 5 years. And so what that will do is that will lower those rates when you take a taxi, and they think that will stimulate demand and then re-accelerate growth in the out years.
So we know Uber for Uber, just our rideshare. We know Uber for Uber Eats, but Uber is also trying to get into the freight and the autonomous realm. Talk about how that's pumping up the company.
Exactly. So they do a lot of detail on this. Uber basically has, let's do a 30-second overview. Uber basically has 3 main business lines, okay? There's ride sharing. That's about 85% of the business, and analysts think that can grow over the next 3 to 5 years at a 15 to 20% rate. Then the other business, the other bigger business is Uber Eats. That's about 15% of the business. And they think over the next 3 to 5 years that Uber Eats can grow at a 50% rate. So really, really strong there. And the other one that's just starting is Uber Freight, right? That's only 1% of the revenue today, but they think it can grow 85% over the next 3 to 5 years, which would result in Uber Freight actually becoming a pretty big part of the business, about 10% of the revenue, 10 to 15% of the revenue in a decade from now.
Those are big numbers. How do they kind of change the freight game with a player like Uber getting into it?
Exactly. So just to put in context, here's what they're actually projecting. So right now, Uber is at a gross revenue run rate of around $500 million, okay? And so Wall Street thinks that they can get to $4 billion over the next, call it 4 years by 2023. That's an 85% compound annual growth rate. Really impressive, right? And so I sit next to JP Hampstead here, and we were talking about this. We're like, this is very impressive. Like, is there any historical context for anyone else who's been able to do this? So we thought of Echo, which is my chart here. Echo is a really impressive, fast-growing brokerage company. And so we said, well, when was Echo at a $500 million run rate, similar to where Uber is? That was back in 2010. My chart doesn't go back that far. But they've gone from 500 million in 2010 to 2.5 billion, so 25% growth. So analysts think that Uber Freight can do 3 to 4 times faster growth than Echo over the next few years.